Welcome back, my friends. Well, my friends, Uber just reported earnings. And, I must say that they are positive and improving. But you may have noticed that Uber is getting more expensive to use. In fact, Uber CEO Dara Khosrowshahi balked after a reporter tells him the cost of his 2.9-mile Uber ride. The price of an Uber ride can catch you off guard, even if you're the company's CEO. Uber's Dara Khosrowshahi was surprised when he learned an interviewer paid $50 for a 2.95-mile ride. Uber prices have surged in recent years because of inflation and a pandemic-era driver shortage. What does it mean for the economy? And, what does it mean for the future of the United States? But, before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And, before we continue, a word from the sponsor of this video. Today's sponsor is InnerLife.com, creator of the InnerLife STS system. InnerLife STS is a cloud mobile platform for mental health care and its integration with primary medical care. InnerLife STS is designed for assessment, data collection and analytics, documentation, and progress tracking. InnerLife STS creates and composes conceptualized narratives and builds them into professional-grade reports. These reports are designed for use by mental health professionals, primary care physicians, justice system professionals and universities and include mental health assessment reports, mental health treatment reports, and treatment progress reports. And InnerLife STS uses doctor-selected pseudonames for all patients. So, only the doctor knows the patient identity. Many people have experienced sticker shock at an Uber's price, and the company's own chief executive is no exception. Wired's editor-at-large, Steven Levy, took a 2.95-mile Uber ride from downtown New York City to the West Side to meet Uber's CEO, Dara Khosrowshahi. When asked to estimate the cost of the ride, Khosrowshahi put it at $20, Levy wrote. His estimate, as it turned out, was less than half the actual price of $51.69, including a tip for the driver. Wow, the CEO said upon learning the cost. That wasn't the worst of it. Levy said that when he first tried to book an Uber to get to the interview, the price was $20 higher. Khosrowshahi chalked it up to surge pricing, though as Levy noted, it's 10 a.m. on a sunny weekday, and it's not like the president's in town. Everything is more expensive. Inflation has become a part of our everyday life, Khosrowshahi responded. With Uber, the vast majority of your fare is going to your driver. Earnings per week for our drivers are up 50% over the past 4 years, because that is the cost of time and the cost of labor. I think that's positive. Data from Rakuten Intelligence indicated the cost of rides from ride-hailing apps like Uber and Lyft increased by 92% from 2018 to 2021, CNBC reported. Rakuten's data suggested Uber fares in April 2021 were up 40% year over year. Khosrowshahi vowed at the time that prices would return to nearly the good old days by September. Still, earlier this year, the UCLA Labor Center found that from February 2019 to April 2022, the median passenger fare for Uber and Lyft in New York City increased by 50%, while median driver pay increased by only 31%. Khosrowshahi has previously attributed some of the recent growth to inflation and a shortage of drivers. But last August, the company reported reaching a record 5 million drivers worldwide, up 31% from the year prior. We have a very strong flow of new drivers who are signing up, coming on to earn, Khosrowshahi said at the time. Over 70% of them have said that inflation and what they're seeing right now in terms of the cost of groceries, the cost of living, plays a part in that decision for them to come onto the platform. Some of the price increases are also attributable to the fact that Uber is no longer subsidizing rides on a quest for growth and is instead focusing on profit. It seems to be working. This week, Khosrowshahi announced Uber's first operating profit. In fact, the New York Times reported that Uber ride prices are about 40% higher than they were a year ago. Some people have even reported that their Uber trips to the airport have cost more than their flights. Supply and demand are the main explanation as to why Uber is so expensive right now. Basic Uber and Lyft pricing is pretty even, but regional variations occur due to supply and demand. Each company calculates surge pricing in a different way, and places with fewer drivers with one or the other firm will feel demand more intensely during busy periods. Uber is available in Los Angeles and it can be an okay option for getting around the city, but because of the size of the city and the surrounding area, gas prices, and the demand for ride-share services, Uber can be quite expensive in Los Angeles. The controversial practice of surge pricing used by high-profile rideshare company Uber is based on this logic of fairness. The idea behind surge pricing is to adjust prices of rides to match driver supply to rider demand at any given time. Rides have been getting, and will continue to get, more expensive. Average Uber prices rose 92% between 2018 and 2021, according to data from Rakuten. A separate analysis reports an increase of 45% between 2019 and 2022. The company has been subsidizing rides to attract more customers and gain market share, which has resulted in a significant loss of revenue. Furthermore, Uber's business model is based on the concept of the gig economy, where drivers are independent contractors rather than employees. Uber said it remained on track to generate a quarterly profit from the strength of its business operations sometime this year, a milestone on the road to overall profitability. Uber reported $8.6 billion in revenue in the last 3 months of 2022, a 49% increase from a year earlier, when the Omicron variant of the coronavirus dampened travel. The company made $30.7 billion in gross bookings, the amount of money paid by customers, a 19% year-over-year jump. How the biggest companies are performing. Appeared in the August 2, 2023, print edition as Uber's businesses turned profitable for the first time. You look at the market's reaction to Uber's quarterly results, out this morning, you might think the company performed poorly. The stock is down about 6%, most likely because the company missed the market's expectations for quarterly revenue by about $100 million. However, despite the expectations gap, it was a good quarter for the ride-hailing company, which finally posted a GAAP operating profit in addition to other profitability benchmarks that indicate all the years of investing in its business are paying off. In fact, Uber seems to be firing on all cylinders across most of its operating units, leading it to forecast revenue for Q3 2023 ahead of analysts' expectations. One could argue that the company's results bode well for its US rival Lyft, but the latter's shares are trending even lower than Uber's, indicating that the market is not convinced that the smaller company will report strong results. This morning, let's dig into Uber's results, check how the stock market is thinking about the company, and then close with notes on what we might see from Lyft when it reports in around a week's time. Supply and demand are the main explanation as to why Uber is so expensive right now. However, even before the pandemic, Uber was getting expensive. Why are prices higher than normal? Surge pricing takes effect when a lot of people in the same area are requesting rides at the same time. This means that rides will be more expensive. Adjusting the price attracts more drivers to an area so everyone can get a ride. In application messaging, noting higher than normal pricing will help you know when surge pricing is in effect. You can wait a few minutes while more drivers get on the road, or you can pay a little extra to get a car right when you need it. In some cases, surge may now also dip below our published rates, based on current market conditions in your area. Dynamic pricing takes effect when a lot of people in the same area are requesting rides at the same time. This means that rides will be more expensive. Adjusting the price attracts more drivers to an area so everyone can get a ride. For the last several months, financial headlines have been dominated by big tech's progress in artificial intelligence, AI. One of the more subtle tech success stories in 2023 is Uber Technologies, a stock that is up an eye-popping 95% year to date. Despite this momentum, several on Wall Street believe the best is yet to come. Uber stock could very well be headed to all-time highs. Moreover, after learning more about its business, some investors may be compelled to hold the stock for the long term, as Uber could be headed toward a very exclusive club. Uber is definitely one of the pioneers of the gig economy. But what started off as a new, innovative way to hail a taxi has evolved into much more than on-demand rides. Uber currently segments its business into 3 categories: mobility, delivery, and freight. Mobility is where the company's roots lie and is its largest revenue driver. The delivery segment allows consumers to order from restaurants or even grocery and alcohol stores and have goods delivered to their door. Lastly, the company's smallest segment, freight, is Uber's homegrown logistics marketplace. For many drivers, Uber has become more than a side gig, but rather something of a real career. By expanding into other products and end markets, Uber has been able to separate itself from the competition. Moreover, these augmentations to the business directly impacted Uber's financial results across the top and bottom lines. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.